Now, the next concept is cost concept. And this concept is also based on the going concern concept. Here, we will be recording the value of assets on the cost basis and not on the market value of the assets. And that is based on the assumption that a business unit is a going concern. And here, no doubt, we will be reducing the value of assets. That how we will do? That is by providing depreciation to the assets. But here we will be ignoring the market value of the assets. And this cost concept, it stops any kind of manipulation that will happen when we are taking into account the market value. Okay? But on the other side, it ignores the effect of inflation in the market. That can sometimes be very steep. Still, the cost concept is widely and universally accepted, on the basis of which we will do the accounting of a business unit. And the next is dual aspect concept. So there must be a double entry to complete any financial transaction, that we already know, right? That means debit should always be equal to credit. Okay? So hence every financial transaction has its dual aspect. That is, if we get some benefit and there will be paying some, we will be paying some benefit. Okay? For example, if you are buying some stock, then it will have two effects. That is, the value of stock will increase. So we will get benefit for the same amount. On the other side, it will increase our liability, that is in the form of creditors. Right? For example, if you are purchasing a stock of rupees 25,000, what will be the effect of that? Stock will increase by rupees 25,000. So that is the increase in debit balance. Okay? So what will be the other effect? That is, either cash will decrease by rupees 25,000. So that is a decrease in our debit balance. Or the creditor, okay, creditor will increase by rupees 25,000, and that is an increase in credit balance. Hope the concept is clear, right? Now comes the accounting period concept. Here, as per the going concern concept, the life of a business unit is indefinite. So, to determine the profit or loss of a firm and to ascertain its financial position, this profit and loss accounts and balance sheet, they are prepared at regular intervals of time, and it is usually at the end of each year. And this 1 year cycle, that is known as the accounting period. Okay, and what is the purpose of having this accounting period? Can you tell me? The purpose is to take corrective measures, that is, keeping in view of the past performances, we need to nullify the effect of seasonal changes to pay taxes, etc. And based on this concept, revenue expenditure and capital expenditures, they are also segregated. Revenue expenditures are debited to the profit and loss account to ascertain the correct profit or loss during a particular accounting period. Okay, and the capital expenditure, they comes in the category of those expenses, the benefit of which will be utilized in the next coming accounting periods as well. Understood? So here the accounting period, it helps us to ascertain the correct position of the firm, that is the financial position of the firm at regular intervals of time, that is at the end of each accounting period.